So you have the Sisala Limited balance statement of financial position, as you can see
Sir,
it. Yes.
let me ask you this question though.
Yes.
When you see this capital reduction,
Yeah.
what should first come into your mind? The picture you should draw, like, you know, from what you taught me, when I see business valuation, no matter what, I should be able to find net assets because earnings will always be there.
Okay.
So here like this, when you pick it like this, what picture are you going to cast in your mind before you start?
No, when you see uh, a question like this, first thing you should
Mm.
know is that you should be able to identify whether it is capital reduction or it is liquidation or it is reorganization. Though
Yes.
capital reduction is also as reorganization, but at a point they can also give you a question where you have to either liquidate or you should what? You should do what you call maximum loss. A maximum loss will help you to what? To reorganize the company, or you should what? Another company is taking over, which is amalgamation, as you pointed out yesterday. So that's the first thing that have to come to your mind. If you're able to identify that, you're able to distinguish that okay, this one is what capital reduction, pure capital reduction, as we are said it, we are doing right now. There's no cause for alarm. So when you are challenged with that, the first thing which should come into your mind is your ability to do the ledgers.
Thank you.
If your ledgers are bad, capital reduction will be very difficult for you. The first thing I would advise you to do is that you should open your statement of financial position down. Open it down. Put it down
Thank
already.
you.
You understand?
Thank you.
Put it down. Open your statement of financial position down already. Then all
Thank
the items that you see in there, copy all of them like that. You understand what I'm saying? Can you
you.
see the
Yes,
board?
sir.
Can you see the board?
Yes.
Good.
Yeah, that's the picture.
So what you will see here like that, open your what? Open your statement of financial position and copy the same thing. All you have to do is that you do statement of financial position as at the year ended 20 June 2019. Then you start with what? Asset, non-current asset. Then you copy all the things that you see over there down.
Thank you.
You understand? You copy it to the last. When you
Thank
are
you.
done, don't put the figures there. The only thing that you will do is that you will not put the figures there. Are you
Thank
with me?
you.
You will not put the
Yes,
figures
sir.
there. Now, because when you do it that way, it will be easy. After you finish your ledgers, all you have to do is you just carry the balance carry downs back to the figures, back to the balance of financial position. That's all. Are you with me?
Yes, sir.
Because in a case maybe time beat you, you couldn't get it, or whatever you've done, you just left the figures and come and put them down.
Thank you.
So that is what you first look at for. Okay. So shall we go?
Yes, let's run.
Okay, good. So this is the capital reduction question. Go and let us read the requirement. The requirement
Sure,
says what?
sure,
The
sure,
requirement
sure.
says that
The
prepare
requirement
capital
is
reduction.
asking us to prepare.
Prepare capital reduction account as of June 2019. Prepare statement of what? Financial position as the same year. No, they are talking about don't don't clear anything. There's a reason as a June capital reduction account as a June. Don't haste. There's a reason for that. And then prepare statement at the end of the accounting year. Okay, so let's move. So once you've understood it this way, what do we do? Now you've had all these things available. So you have a statement of what?
Yeah.
Statement of what?
So we should prepare.
Financial what? Statement of financial position, sorry. Okay, so this is what they want you to do. Then you underline it. And I said that, what do? You'll bring the items, the first item. So you have your what? You have your assets. First item is what?
The first item is
So you have non-current assets.
we have assets, non-current assets. Then we have patent and copyright.
So mention them to me.
Patent and copyright, sir.
So you'll bring them.
Yes, sir.
The next one is what?
The next one is land and building at net.
Next one.
Yeah, land and building at net means what?
No. Oh, when they say at net, it means they deducted all the depreciation and all that. So the net means they deducted something.
Thank you.
Okay. What again, please?
We have plant and machinery at net.
What again?
Then we come to current. So
Okay.
let's write there. I have current asset. I have inventory.
What again?
I have trade receivables.
What again?
I have bank.
Uh-huh.
Then I have investments at cost. Then the next one is total assets.
Okay. Total assets, what do you have? First one is what?
Then we come to equity and liability.
Uh-huh.
Okay.
Uh-huh.
Equity and liability, we have ordinary share capital.
So we have ordinary shares. Uh-huh.
Then we have 20% cumulative preference share.
20% whom preference shares. Uh-huh.
Then from there we have retained earnings.
Retained earnings.
Yes, sir.
Uh-huh.
Then from there we have non-current liabilities.
Good. Uh-huh.
We have 50% debenture.
Uh-huh.
From there we have current.
Okay.
Current liability, we have interest on debenture.
Uh-huh.
From there we have trade payables.
Uh-huh.
From there we have provision for business restructuring.
Provisions
Yes, sir.
for restructuring.
Yes, sir.
Uh-huh.
From there we have provision for legal damages and claim.
Provisions.
For legal damages and claim.
Uh-huh.
Then we go to provision for warranties.
Okay. Yes, that is having some.
Yes.
Okay. What again?
It's done, sir.
Then you copy, you see, you copy it like this. Then you leave it.
Thank you.
So when you leave it, then you come and start with what we call your capital reduction account. So you come here,
Yes, sir.
that's your capital reduction account. Okay. Then you underline it. So you have your credit and you have your debit.
Right here.
Okay. Then this how when you are done, this how you are going to start with the whole thing. Now you go into your what? Go into your balance sheet. So when you go into your balance sheet, the first item you see over there, what do you see?
A balance sheet, I'm saying patent and copyright.
Patent and copyright.
Copyright.
Okay, so when we look at the patent and copyright, what did they say? So when we pick patent and copyright,
Footnote.
the footnote and see if there is anything that they've said about. So yeah, you'll start with what? You say well patent and copyright, right? So you come and
Yes, sir.
open your ledgers. Alright, so you'll start with what? Your patent and copyright
Okay.
account. Alright, so this one you have debit and credit. Okay, what did they say? And patent and copyright has what? It has debit or credit balance.
This one is a debit balance.
So you start with what? Your balance brought down. That's how much you go into the balance sheet, then you look at it. How much?
Balance brought down is 75,000.
Then you bring your 75,000 here. Now you go into the what? Into the question and see. Did the question say anything about the patent and copyright?
Yes, sir. Let's go there. Sir, I'm not seeing anything about
Go to
patent
the
and
fair
copyright.
value. Go to the fair value.
It is nil. Yes, sir.
So what does it mean?
It means when the fair value, when it is real value, we didn't get anything. So we maintain the same value.
No. Say it again. Let me
When the
no. Let me explain that again for you.
okay.
Patent and copyright, they are intangible assets.
Thank you, sir.
Good. Mostly, let me put that caveat here. Mostly, or in most cases, mostly intangible assets. Intangible assets lose values
Okay.
in that period of what? Of financial distress. You understand? They don't have value anymore when company is what? Is what? Is in the financial distress. The reason why when you are doing capital reduction, goodwill is what is written off. It means we write it off from the book. You understand? Goodwill is what is
Yeah.
intangible asset. Patent and copyright is also intangible asset. It doesn't have any value again because it cannot bring any money into the system when the company is what? It's in the financial
It's no
crisis
more
such
in
as this.
crisis.
You
Thank you,
understand?
sir.
So when the reason why when you see in that way, this is, but in most cases, in most of the question, they will tell you that patent and copyright is what must be written off, blah blah blah. Goodwill, they will say is what is written off, right? But you see, this in fact they didn't tell you outrightly, but they told you that when they did the valuation, it is what it is nil. You understand? If it's nil, that means it has no value.
Yes, sir.
So if it has no value, you understand? So if it is zero, so it means it is what? It is valueless. Are you with me?
Thank you.
So if it is valueless, then you bring it at the debit side because who is losing?
If it is nil, Then the company is because the company use it
So who is
when
losing?
the company,
The company is losing. So here it will go to what? Capital
the
reduction
credit.
account. 75,000. Do you understand this?
Thank you.
Do you understand this?
Yes, sir. I get you, sir.
So if you go to capital, then you come here. Then you come and
Then you
also
debit.
what? You debit it here. So patent and what? Copyright. Also what? 75,000. Now, which item follows?
The next item is land and building.
Now you pick land and building account.
Thank you.
That also has what? Debit and credit.
Debit balance.
Okay. Now it has debit. Which balance does it have?
Debit balance, sir.
Go. So if it has debit balance, then you open it. So here balance brought down. It's how much? Check your book.
200,000, sir.
Okay, so 200,000. Now go to the III, the valuation.
It was revalued to 225,000.
Go. So you will bring your what? Your revaluation here.
So
You said
there's
what?
a gain. 5,000.
5,000. Right? Okay, so 5,000. So here, where is which one is higher?
The credit side is higher.
So that means the company, are they losing or gaining?
Here the company is gaining.
So it will go to a capital reduction account.
Yes.
So the difference will go to capital reduction account. So what is the difference, please?
The difference will be 25,000.
25,000. So here, you close your account 5,000 to 5,000. Okay. So then you take it what? You come to capital reduction. So here it is what?
Credit.
Land.
You are
You say it's what? Land and what?
and building.
Building. What is what? You said was 25,000.
Yes, sir.
Okay. Which item follows?
The next item on the row is plant and machinery.
Plant and machinery.
Yes, sir.
I come here. Plant and what? Machine. Okay. I'll answer you. Okay. So here, debit or credit
Balance
balance?
brought down.
Come again.
It's an asset, so it's a debit.
Okay. How much?
The balance is 150,000.
Now check revaluation. What do you see over there?
Revaluation is 75,000.
Revaluation is 75,000. Okay.
Yeah.
Okay. So is it gain or loss to the company?
This will be a loss to the company.
Okay. So the difference, so it will be at the debit credit side, right? So
Yes,
it's a
sir.
loss there. It's
Capital.
what? Capital reduction. How much? The difference will be how much?
The difference will be 75,000.
75,000. Okay. So you close that one too. Which item again?
The next one is inventory, sir.
Okay. So let's go to capital reduction account. You say it's a loss, eh?
Yes, sir.
So what is
So it will be
plant?
debited.
Plant and what?
That is
Plant
plant
and
and
machine.
machinery.
You say what is 75,000, right?
Yes, sir.
Okay, let's go. Which item again? You say inventory, right?
Inventory, sir. Yes, sir.
Now, inventory account, that one too.
It's an asset. So
It's an asset, so you have the balance. Okay, so you have Balance brought down. That's how much?
Inventory is giving me from here 125,000.
125,000. Now go
Yes.
to the revaluation. What did they say about it?
Revaluation inventory is 105,000.
Okay, so that one, no, the revaluation,
Yes, 105.
105,000.
Yeah.
Okay, so this one is it gain or loss?
It's a loss, eh?
Okay, so that one too, you have what your capital reduction to be how much?
This 20, sir.
20,000.
Yes, sir.
Good. And what again, please? So this one too will go to
Then,
capital
then
reduction
go to,
account. So you have your
yeah,
inventory,
inventory.
which is how much? 20,000.
20,000.
Okay, let's go. What again?
Next one, trade receivables.
Okay, so that one debit or credit account.
It's still an asset, so
So that one balance brought down. It's how much?
trade receivables balance brought down 125,000.
125,000.
Yes.
Okay. What did they say?
Here
Did they
when you
do
come here,
revaluation on that?
70. Yes,
Fair value. It's how much?
70,000, sir.
So that's what the fair value
Yes, sir.
is 70,000. So this one
Yeah.
is a loss, eh?
Still lost.
Eh?
Yes, sir.
So that one too will go towards capital reduction account. How much?
Reduction. Yeah. 55,000.
55,000. Okay. So you go to capital reduction. So here you close the account too. You close the
Sharp.
account for so 125,000 to 5,000. Okay, so this one too.
Let's go to capital reduction.
You go to capital reduction account. Where is it? Where is
Debit.
it going? You go to debit side, eh? So this one
Yes,
too.
sir.
Let's see what happens. Please, how much? 55,000.
55,000.
55,000, 5,000.
55,000,
Okay,
sir.
the next one is what?
Bank.
Balance brought down is how much?
Bank balance is 37,500.
37,500. Okay, let's go.
Next one is investment cost.
Okay, investment account. Balance brought down is how much?
Balance brought down with investment
Eh?
100,000, sir.
100,000. Okay, go to the revaluation, the check the revaluation.
Evaluation. Investment
Mm-hmm.
75,000.
75,000. 75,000. Now, the company losing or gaining.
The company is losing
So capital reduction will come in. How much? The difference is how much?
25. 25.
25,000. 100,000. Wow, 100,000. You know that when that happens, you will also have balance brought down of the you know that. So the balance brought down investment is how much?
Yeah. And that will be the 25,000.
75,000. Good. The rest will be you apply the rest to the other one. So yeah, let us go to capital reduction. That's what's investment, right?
Yes, sir.
The amount is how much?
We had
25.
25.
Okay. What again?
Then we go to the equity, sir. Additional relevant information.
Okay.
The following scheme of reconstruction was approved by all parties as well as the High Court, with the expectation of only one ordinary shareholder. I. The ordinary shares were to be reduced to 5 Ghana cedis per share.
So now wait. So here, what are we coming to do here? Okay, so share capital account. So why
Yes,
and
sir.
you know if you what start to air kind of additional information. So here, additional information. So you have balance brought down. Share capital account balance is how much?
That one, let me go to the book. 375,000.
Okay. So what did they say in the question?
The question ordinary shares were to be reduced to 5 Ghana cedis per share.
It was to be
It was normally at 10, and
come
now it
again.
has been reduced. It was at 10.
Uh-huh.
Now we are to write it down to 5.
Okay, so here, so what do we mean here? So here, all that they want you to do, all that they want to say that you should write it at what? To what? To 5 cedis, right?
Yes, sir.
Okay, so if you are writing it to 5 cedis, then you have your what?
Then you lose 5 cedis.
So then that will give you what? Your capital reduction. You understand? So if you are
Okay.
losing 5 cedi, the 5 cedi, what is it? So here, before you do this, you should first even do this. All you have to do is that first come and your share, come and find the share capital.
Okay.
So the share capital is how much? The share capital is you said 37.5 million, right? Now unit share is how much?
Unit of a share.
Share price is how much?
10 cedi, sir.
10 cedis.
That is the initial stage.
Okay, so unit share of is what 10 cedis, right? Okay, what's up? Okay, yeah. So unit share is what 10 cedis. So like this. Is that it? Okay.
Yes, sir.
Now, so here, if unit share is this one, then number of shares will be how much?
Okay.
Will be what? 375,000 divided by 10, right? So that gives you how much? 3,000.
37,500.
You do that. 37,500.
Yes, sir.
Now, they are saying that you should what?
Reduce it.
Reduce it. So the reduction is what? We'll go to capital reduction. So you have your what? Your capital reduction here. Is what? 5 cedis, right? And then share capital is also what? 5 cedis. Is that not the case?
Yes, sir.
So so here, when you are done there, you pick the number of shares is how much? 37,500. This one to 37,500. So when you multiply, what do you have? Do you understand what I have done here?
I'm coming, sir. That is 1/8.
Do you understand what I have done there?
No, sir. Unless you explain it, sir.
All the time when you are reducing they've given you like that, you need to change it into number of shares. So you know the number of shares available. So here the number of shares, 37,500.
500.
Now,
So we are going to find the share capital.
in the question, they said that the shareholders have agreed to do what? You read the question. They said the shareholders
To
have agreed to
reduce.
do what? So they've agreed to reduce their share value to what? From 10 cedi to what? To 5 cedis. Eh?
Yes, sir.
So if they agree to reduce their share from 5 cedi, 10 cedi to 5 cedi, then this is the number of shares, 37,500. You multiply by 5. That give you
You
what share
get
capital.
1,500.
So that is it. So that's what you will have it here. As what? Your balance CD to be what? To be said what?
8,500.
500. But when you multiply, that's what it's going to give you. Is that not the case?
Yes, sir.
5 times the number of shares. So first, you should convert the what? The number of the value into what? To the number of shares. You understand? Before you can do this
Yes,
calculation,
sir.
when you come to the share capital, so you should be very careful. Now, when you
Thank
are
you.
done, the difference will go to what? Capital reduction. So how much will go to the capital reduction?
So, minus 3, 7. The same amount, sir. There is half.
Yes.
The 5 is half.
So that's 1,850 like that. Then you close the account. So here you go to capital reduction account where you will have your share capital, and the amount is what 1,850 or 5,000.
500. 1,850. Thank you for this analysis.
What again?
Thank you very, very
What
much.
again? 20% what? Preference shares
Debenture, sir. Preference share.
account. Okay.
Coming.
So this one to us what? Credit balance. So let's go.
Credit balance. It's 175.
Additional for what did they say?
Yes, cumulative. The preference shares were to be reduced. They were to be reduced
By what?
by 7.5.
Okay, so you go there again. You go and do your what? Your preference shares. You go and do preferential analysis also.
Thank you.
Now, what is the
Thank
total value of preference shares is how much?
you. Total value of preference share is that is
1,750,000.
175.
Did they tell you how
Yes.
much they sold? They bought it. Check. What is the
Let's check from
unit price is how much?
10
Check it.
cities.
10 series. So that is the what? The price. The price is 10. Now, if you want to know the number of shares, what do you do?
We divide
175,000 divided by 10. That gives you what? 1,750.
7,700.
Now, when you have it, and they said that it should reduce what? Reduce to what?
7.5.
So from 10 to what? 7.5. So how much are
0.5.
they losing?
They are losing almost 2.5.
So they lost 2.5. So this is what will go to what? To the capital reduction. Do you understand?
Yes, sir.
So so your new preference share value will be what? It will be 1,750 times 7.5, right? And then the rest will go to what? Capital reduction, which is what?
Okay.
1,750 times what? 2.5. You understand? So
Yes, sir.
give me the first one. Let us get the first one.
Okay. 7.5. It's 1,312,000.
Now mention the values one by one. So that gives
Okay.
you what? Your
One
closing
three one
balance. Your balance carried down with what? 1,312,500,
one two 500.
right? Now the difference will go to what? Capital reduction.
Yes, sir.
Difference between this one and the other. So here you have 1,750,000, 5,000. Okay, so what do you have? Check.
So we are going to find the difference. 43,000 43750.
Okay, so this one will go to capital reduction at the what? At the credit side because
Side, yes.
the company is what? Is winning. So preference shares. So how much is that? You say 4375. Okay, what next, please?
We go to the retained earnings.
Okay. So you are following the equity also. So I think you pick the item from the balance sheet one by one. That's how it will go. Right?
Yes,
Then you come to
yes, and
additional
that's the
information and
best way.
see if there's any problem with that. Okay.
That's
So let's
the
go.
best way. Retained earnings.
Good. Retain earnings. Remember what I told you. Now, when you look at go to the balance sheet. Look at where the retained earnings. What can you see about the retained earnings? What can you see?
There's bracket. There's bracket.
So you pick your retained earnings. So that one it has credit balance, but because it is what it's in bracket, it will be what? It will be debit balance. Yeah. How much is it?
Retained earning is giving me 75,000.
75,000.
Yes, sir.
Now go into the additional information. If they don't say anything about it, we know that it is automatically going to be written off. There's no choice about that.
Sir, I'm not seeing anything of the sort.
You are not saying so it will be written off automatically. Why?
Mm.
Don't worry at all. It will be written off automatically. Have you seen that it
Oh,
is already in bracket? So
yes, sir.
what do you expect? Don't expect anything. If they don't say anything about it, it will be written off straight away.
Okay. Thank
Look
you.
at Ivy. Look at Ivy. Go to that. So look at
Okay.
the Ivy.
The balance on the retained earnings is to be eliminated in full.
Have you seen that? Eliminate. So that means you should write it off. So when you are writing it off, it will go to what capital reduction account. So it is a loss to the company. So you want it to go to
So
the credit side.
debit
It will go to the debit side. So which is what? Retained
75.
earnings.
Then the next one is debenture, sir.
Good. So the next one, debenture.
15% debenture.
Okay, so we have come here. 15% of debenture.
Yes, sir.
Okay, so what do you see about that?
Credit balance, sir.
Okay, it has credit balance. So
125,000.
125,000. Like this.
Yes, sir.
Okay. What again? What do they say about that?
Debenture. Let me go into the notes. Notes. VI, the accrued debenture interest was to be paid. That's all.
I didn't hear what you said.
The accrued,
The what?
deben- accrued
Accrued.
in
Okay, okay.
debenture, accrued debenture interest
Uh-huh.
was to be paid in cash.
Okay. Is that all?
That's all.
Accrued debenture is to be paid cash.
Yes, sir.
So you go into the balance, you go into the account, the accrued debenture. Do you have any accrued debenture in it?
Into the
Check the. Oh, okay. There's nothing like accrued debenture, right? Interest.
debenture interest.
So the
Yes.
accrued, so that is the interest they are talking about. Accrued debenture. Because when you look at this question, clearly the debenture, there's nothing wrong with the debenture. So the debenture will continue because they didn't say anything about the debenture.
Yes, sir.
So it will be what? The debenture will continue to remain as it is. Right? Then you move to the
Yes, sir.
next one. They didn't say anything about it. So the debenture will continue to remain as it is. Yeah, let's move to the next one.
Okay. Then we pick the next one. Interest on debenture.
So interest on debenture.
750.
Interest on debenture account. So you open a ledger for that. It had a credit balance. So balance brought down. How much is it? 18 what?
8,750.
Okay. So go to additional. What did they say about that?
I think that is what we read. The accrued debenture interest was to be paid in cash.
Okay. Accrued. So how much are they paying?
18,750.
18,750 is to be paid in cash.
Yes, sir.
Now check. It's to be paid in cash. We agree.
VI.
VI was to be paid in cash. Okay.
I said the last note. I saw what you want to ask. Go to the last note.
The half year debenture interest has
I
not been
also
paid.
read.
That's where well, that's what I read it somewhere like that.
Yeah, you are right.
Yeah, so the half year debenture interest has not been paid. So yes, I've seen it. So here, have you seen it? This one we
Yes,
are
sir.
supposed to settle this one in cash, but half of it is what is settled, and half of it is not settled, right?
Yes.
Okay, so
Yes, sir.
here you will say on settled. So the settled you will just pick the
Half.
1/8, then you divide it by 2. Whatever you get is settled, right? So do that. How much is that?
So I'm coming on 18,750 times 50. 9375. 75.
9375. So then unsettled.
The same amount.
Okay, so the unsettled will be the same amount. Okay. So now watch here. Nine three seven
Seven
five. So here,
five.
what do you have it here?
The same value.
18750. 18750. Now they said half of it is settled by cash. So what do we do? Then you come to bank or cash to come and pay it from it. Have you seen that?
Okay. Okay.
So you are paying it through cash. Is that not the case?
Yeah, so it's bank. You go to bank.
So you come here, then you come and credit bank as what? Debenture interest. So the half year
Last
debenture interest has not been paid.
indeed.
But in the IV, it says what?
IV is should be paid.
The VI, so the accrued interest was to be paid in cash.
Cash.
Okay, so this is how you are going to do it. This is how you are going to do it. This is supposed to be paid in cash. So in here, the cash has to be what? We have to credit cash with all the money.
Okay.
We have to credit cash with what? All the money. This one has to be what? We have to credit it with all the money. Right? Because it's supposed to be what? It's supposed to be paid out from our cash. So in there, this money has to go in. So let us say, so it is what? 1/8. It's what? 1/8 7 what?
750.
750. So debenture interest is supposed to what? Is supposed to be paid in cash. However, in the books, they said that only half is settled. So only half is settled. So if so, then how is the treatment going to be? You see how sometimes they put this question.
Yeah, very, very cumbersome.
Very, very, very confusing here. So here,
Yeah.
half of the money is what is settled. So you see that the company will still in their book, they will still show that part of the money is paid, part of money is already received by the people, but the part of money is not received by the people. But when you read the last sentence, that's what he said that half. He said that half what? Half
Half,
is not what?
yeah,
The half year
it's a
debenture
half
interest has
year
not been paid.
venture has not been.
You understand? Okay. So let
Yes, sir.
us maintain it the way they are. If it doesn't balance, then there's a problem with this one. So let us maintain. If it doesn't balance sheet, the balance sheet did not balance, then there's something has to be done with this one. But they said that the money is what it should be paid by what? By cash. That last sentence they said that half of it is what is settled. So you let us enter it at a six. The next one is what?
The next one is trade payables.
Okay, trade payables. What did they say? Trade payable has credit balance. So what did they say?
Yeah, it's 93750.
93750. What did they say
Five
about
zero.
it?
Mm, I can see there's some small table. The following
No, trade
additional
payable.
information.
Trade payable, I'm saying that what did they say anything about it?
That is what I'm reading.
Oh, okay.
The following additional information is relevant. Sisala Limited continued trading from 1st July 2019 to 31st December 2019, which resulted in the following changes in assets and liability. Bank and cash increased by 10,000.
So so don't forget about that one. Trade payable is how much?
Trade payable is 5,000.
Come again.
5,000 from where I'm reading.
Payable
Go to
trade
the
payable is
last note.
5,000.
Go to the last note. The
No,
first
in
one
the
is
in the
that
same
one is
financial position, I mean.
yeah. Oh, that one is correct. This one is correct.
No,
Nine
I'm talking
three.
about the no. Concentrate on the what certain financial position. That's where you are picking your figures
Yeah,
from.
yes, and that is the value. It is 93750.
93,
750.
and it didn't say the question didn't say anything about trade payable. Then that means there's nothing wrong with trade payable.
Okay.
So balance carry down. So that's where you should avert your mind to. That's all.
Okay.
So that means that one there's nothing wrong with it. Okay, which item again?
The next item is provision for business restructuring.
Provision for what?
Business restructuring.
Okay. Okay. What is that? That one is what?
That is 50,000.
Provision for what? Business restructuring. So
Yeah.
this one, this one is what? This is restructuring expenses.
Okay.
You understand? So this one is restructuring expenses. So this one you don't need to uh open accounts for this. You understand? So this one you don't need to open any ledger for it. So all you have to do is that you take it to restructuring what account straight away. So this what restructuring what expenses.
Okay.
Please is how much?
50,000. Provision for legal damages and claim.
Okay, so let's go to provision for legal damage. Okay, so the legal damage, what can you say? This one is it credit or debit balance?
So it's credit.
Okay, so provision for legal damage. Okay, so it's how much?
12,500.
Okay, what again? What did they say about it?
The liability for legal damages and claim
It's
was
what?
to be settled
It was to be
was to be
settled.
settled
Uh-huh.
for 10 million.
Okay.
The provision for warranty reduced to 27.5 million.
Okay, so that means they are settling what the legal damage. So here settled. So
Yes.
so if they are settling, so if it's 10 million, then let them make it 10,000.
Yes, sir.
You understand? So here, so when you read the question very well, no, when you read the question, what did they say? They said that like the guy them claim was to settle for 10,000 and the provision for warranty reduced to 28, 27 points. Have you seen read this very question very well? Oh? Have you seen that the liability for legal damage and claim was to be settled? What does it mean? It means that when you look at the total legal damage here, it's 12,005. 12,005.
500.
You understand? But here they agree that it will be settled at what?
10,000.
You understand? So yeah, if so, then instead of 12,000, they are settling it at what? 10,000. So you see that the company has what?
2,500.
You understand? So this one is a gain to the company. So you go to capital reduction. You see how you see the nature of this thing. Yeah. Okay, so this one too is settled. So from here you come to what? Legal damage. So this one that one will go to the debit side. Okay. Which that one is
It will
2,500.
go to credit.